This is a Sharp Trade investing and trading podcast. The markets, finance, the economy, and commentary. Nothing within this podcast should be viewed as an investing or trading recommendation. Sharp Trade is not a registered advisor or advisory service. It does not tell or suggest which security should be bought or sold. The analysts and employees or affiliates of Sharp Trade LLC may hold positions in the stocks, currency, or industries herein discussed. Sharp Trade LLC assumes no responsibility or liability for any trading or investing results. Facts, statements, and charts posted to the company website within this podcast may unintentionally include inaccuracies. Content is for educational purposes only, and independent advice should be sought to confirm the validity or accuracy of any claim made. You should ask the firm with which you deal about terms, conditions, and risks of specific markets and the associated obligations that such trading may place upon you. You should always check with your licensed financial advisor and tax advisor to determine the suitability of any investment to your individual circumstances. No assumption should be made in relation to the performance or accuracy of the method shown. No claims are made as to the success or profitability of any statements made. You know, it's quite interesting to me. Actually, you know what? It's always been interesting to me how small happenstances throughout life can cause such large effects. You know what I mean? Sort of like, not to geek out on anybody, but just sort of like a butterfly effect. Just one small bump or one small statement's made, and it just like, all of life really can just start going in a completely different direction. That's always fascinated me. I mean, oh goodness, it's been 21 years ago. It's going to be soon. It's going to be 22 years ago. A friend of mine who I also worked with walked into the office that I was managing and said, "Hey, I've got this really cool thing that I want to show you. I think we could make some money from it. It's called futures trading." Huh? Futures trading? What's that? Now, mind you, what I was introduced to was high on snake oil and very low on actual trading reality, which is what we want to talk about in this podcast, which is actual trading reality. But my point is just from that small little statement made to this 24-year-old guy managing an office for an insurance agent, one statement is made, and well, here we are. Here I am. Just one small happenstance in life, and it just completely affected the rest of my life. I've just always found that fascinating. There is a very specific reason I'm talking about this, and I'll get to that here in a bit, but first we just sort of have to introduce who we are. This may be the first time you're hearing a podcast of Sharp Trade LLC. So what's this all about? Well, if you want to know more about Sharp Trade LLC, you can go to sharptrade.com. That's SHARPE, sharptrade.com, and go to the About Us section. That sort of, spells out who we are and what we do and some of this public content. This podcast is a podcast that we have put on some weeks in the past. And, if you're new to podcasts are simply like a digital radio show. So we put this up in a number of places. You can find this naturally on the front side of the house of what we do, sharptrade.com itself. You can find the podcasts there under the podcast category. You can find it on our podcasting host, which is podbean.com. You can also find it on iTunes. So we're also over on iTunes, so you can find this podcast there if you like grabbing your podcast there. And as well, even though it is a podcast and it is not a video, and some people, especially on YouTube, there's this small little idiots section of YouTube that doesn't seem to understand the difference between podcast and video. They're only on YouTube for some reason. But I'm not saying all the YouTube listeners. I'm just saying the small percentage don't seem to understand, well, this is a long video. Not a video, it's a podcast. But anyways, we also throw it up on YouTube, so you can also find it there, and you can find it on Sharp Trade's YouTube page. Things are organized into playlists. Okay, so pick your poison. However you like to listen or to catch your podcasts, you can find it there. Now, and we haven't had any podcasts. Before I jump to that, we haven't had any podcasts in a while, right? If you don't catch the articles that we type up on sharptrade.com itself, well, first of all, what's your problem? If you go scroll down a little bit, there's a email sign up, and you can put your email address in there, and all of the articles will just be emailed to you, so you wouldn't really miss anything. But one of the things you may have missed, if you only catch the podcasts or only catch the videos that we put out, is an article we wrote some time ago called "We're Self-Sufficient." A very, very brief little article, but if you missed that, what I'll do here is sort of summarize it. Okay, so I'll sort of read a little bit of it, but sort of summarize it and go through it quickly. Very briefly, it stated, let's be clear, Sharp Trade LLC itself trades the private stake of the managing partners of the firm. We trade that portfolio, and really this year we're doing really well. Let me think. I think my maximum drawdown, don't hold me to this, I'm going off my memory. My maximum drawdown this year is something like 1.38%. I took a look at it the other day, but now I'm going off of memory. But I think it's around 1.38%. If you take out the cash, that might be around 1.7%, which is still ridiculously good. So anyways, yeah, we're doing quite well. You may have noticed that on the website we haven't had podcasts every single weekend. We haven't had video entries every week. We haven't had text entries even every day. We used to do text entries every single day, and that hasn't been happening. And basically, it's because we're self-sufficient. We don't have to do podcasts each weekend. We don't need to do video entries. We don't need to do text entries. We have been quite happy, and I do mean quite happy, as of late, trading our own self-sufficient portfolio. I mean, this Sharp Trade LLC has gotten where we wanted it to be. This is like when we started the whole thing, and what is now the managing partners sat around, it's like, we want to get it to that stage. Well, we're here. We're self-sufficient, right? So what's nice about it from our standpoint is it doesn't need a lot, right? We want to trade our own stuff, which is what we're doing. And by that, I don't mean like my personal trading accounts, which I have, or, you've heard Phil's, personal trading account. No, we're talking about Sharp Trade LLC right now. And at the same time, we run across stuff, and I'm going to talk about that in this podcast, because this podcast is part of a larger series called Do You Truly Understand Investing? Do you truly understand markets? Do you truly understand trading? We're gonna get into some of the stuff we see, but we do see stuff that absolutely positively drives us batty, crazy, of something I run across, and we just we've got our hands on our cheeks, just like, what in the name of God? Like, are you serious? It's worse than snake oil, right? It's just so much of what we see about investing and about trading and about the way both the industry works and markets work. It's not even graduated to some of it's not even graduated to the level of snake oil. It's just pure idiocracy. And so since that bugs us, we said, when we form the firm, what we'll do is we'll trade our stake, right? Boom, we got our stuff, cool. And we'll get it to the self-sufficient stage that we wanted to get it to. And then we're going to have a ton of stuff for new retail traders that just helps them out. Lots of stuff that they can just peruse at their will. Sharp Income Project that's completely free. A completely free education series and courses. And then 2 premium courses, the Valuation Investing course. By the way, if you have purchased the Valuation Investing course, there's a inserted video I want to put in there. Because
like I give one of my models, right, for valuation investing, and here's how to put the thing together. Something I said at the beginning of that course is I wanted people to get to the end of it and go, oh, this is it, right? Like I took a course back in 1998, 1999. I went, oh my God, this is where I've been screwing up, right? Not method hunting, not system, just the way trading works. Risk overlays, building your own risk overlay. That's what that course was. And being risk advantaged, and different things to do, and doing different. So anyways, yeah, I wanted this course to be that. Well, in the valuation investing course, I showed my one model, and I was thinking the other day, I was like, there's another way to run that whole valuation investing stuff, and I'm just going to insert a video, I think, there with a second model. And if you go in, if you are a valuation investing course, if you've purchased the valuation investing course, I give away the model already. If you go to Sharp Trades forums and you go to the section that's only for valuation investing course folks, let me see here. If you go in there, where's it at? New video. Yeah, there's a thread there. New video segment for the valuation investing course. I said it last month, but it is something I'd like to do, and I give the model there, right? I just want to make a video so that it's polished and it's correct, but I give a whole second model to the construction of a valuation investing segment there, and I want to make a video for that. So that's something that's coming. But we also have the short-term trading course, right? And it's all there. So getting back to my original point, it's all just there, right? So now Sharp Trade really is just set up and running. And when we have something to say, like this podcast, or when we have some text article, right, we'll say it, or there's a weekly update to the Sharp Income Project, well, then we put it out. But it's only going to be when we want to. I mean, we're self-sufficient. And as time passes, is it correct to say you're more self-sufficient? We said in that article, this is simply to say that we said in that article, we may post less continually updating content every single day. Because now, finally, we have all of the pieces of Sharp Trade LLC put together. It's all there. Okay? And again, let me re-emphasize the point. I'm speaking of Sharp Trade LLC at this point. Sometimes ones will ask us questions, and we get email questions, or there's comments that show up, and it almost is phrased in this way, like towards me personally, like Dan. I have my own assets, like things are separate, right? What we're talking about right now is Sharp Trade LLC. So Sharp Trade LLC is not just Dan. For some reason, people really get that in their head, and it's probably because I'm sort of the voice of the company, right? I do or did a lot of the content. We're not speaking about just Dan right now, and that is an important differentiator because I have my own assets apart from the company. Right? I realize some of the people that listen to this podcast, you've never run your own business, but or been part owner in a business or principal in a business or anything like that, but listen, if you own a business, it's not like all of your assets are in that business, okay? Or at least they shouldn't be if you have a brain in your head. So, I don't know, just for some reason people get the idea that when I'm speaking here, and especially in this context, I'm speaking of like me personally or something. It's like, no. I mean, besides being registered with the state, it's like you've heard from Phil, right? Phil is in the How to Begin series. We were thinking about getting our legal counsel on here, but actually his voice did appear on one of the videos when we first formed the company in sort of an About Us video. The legal counsel's voice was on there. I was on. So, we're not just speaking about Dan. That's an important differentiator to make, okay? I'm speaking about Sharp Trade because when you set up an entity like this, and the reason I'm saying that is when you set up an entity like this, it's like you've got to get it to the stage, right? You are charged with the responsibility of this legal entity. And we wanted to structure things in such a way so that, okay, now this entity over here that we have is self-sufficient. That's just very important to make because I don't know. Maybe I'm just speaking my own pet peeve, but I always, And I know anybody that's run their own business or has several businesses understands what I'm saying here. I'm saying this for the benefit of those that have never run a business. Okay, but I don't know. Like I said, maybe I'm speaking my own pet peeve, but it always drives me nuts when we'll get, I don't know, just some questions and comments, and it's like it's all directed towards me, like Dan's assets and how, it's like, no, wait, whoa, wait a minute, that's separate. Right. This everything here is within the realms and the context of Sharp Trade LLC. All right. So when I say we're self-sufficient, I'm meaning Sharp Trade LLC is self-sufficient. It's now a self-sufficient entity of itself, which is a really, really, really nice position to be in. Let me tell you. Took a little bit of work to get it there and to get everything set up as we wished, but it's there now. So we're going to do our thing, right? That scene out of Hancock where he's trying to just make his way through a bunch of guys. It's like, you just let us do I'm just going to do me. We're just going to do us, and you just do you. Now, if you would like to know what we do, and there's a number of things that you can peruse through. Just, we had one listener tell us one time he has just spent hours and hours and hours on the website of Sharp Trade LLC, which makes us feel good, Thank you, but we thank you, right? Because that's what it's there for, and we're happy that it's helping. Now, on that topic, so that explains why you haven't heard as much from us lately, is because pretty much it's all set up. We're still going to say stuff if there's something to say, as long as the company's running. But we're doing by us. Quite well, as a matter of fact. So that's why there's been less content. But there has been one thing that I didn't finish up. Actually, there's several little projects I've got to button up. And one of them is this particular podcast series. Do you truly understand investing? Do you truly understand trading? Do you truly understand markets? Because as I was saying before, we do run across so much nonsense. I mean, just stuff that's just stupidity to the level to where we're just passing it off back and forth, various traders between each other. The managing partners of Sharp Trade is like, hey, have you guys seen this? Right? Oh my God, have you seen this? I mean, we have a private back-end communication channel among all of the partners of Sharp Trade LLC. And we just post stuff among ourselves too. This is like, oh my God, you guys have to see this. This is just such lunacy. I have to share. I have to share the lunacy. We see so much of it. And so we have this podcast series. Do you truly understand investing, markets, trading, right? And the point of this series of podcasts has not been to lord our information over it to anyone else, or lord our knowledge level, like, look at us, we know so much. That's just stupid. That's not been the point. It's been, quite frankly, to do what we do. And what we do is share a lot of things with newer retail traders to sort of maybe help you catch you up to speed. We talked about just various, I don't know if you'd call them demographics or different groups, in the very first podcast in the series. Who are you listening to? We talked about bad information. We talked about ideological reporting. We talked about how returns work. And there can be basically a method of trading where you're taking on so much risk that you are mathematically guaranteeing, even with a couple of big wins, you're guaranteeing that your account's going to completely blow up in a giant mushroom cloud if you keep trading that way, right? So we talked about how returns work. Now, that's going to refer back to what I was talking about in the beginning of this podcast, right? In the beginning of this podcast, I said, what? I know, it's like I've been on 7 different topics. Hey, it's still Dan, right? It's the non-linear guy. But, hey, that's one of the advantages of a podcast. You should sit down to this and it'd be more like a radio thing than just a video that you want to watch, right? So it's more the experience of the whole podcast. But anyways, what were we talking about there in the beginning? That it's funny to me how just one little happenstance can sort of spark something. And this entire podcast series was sparked by one little incident. So in other words, although I may later, and Sharp Trade LLC may later insert some more videos sort of in the middle of this podcast, this is sort of the conclusion of it. This is sort of why we started this entire series of, do you truly understand investing? Do you truly understand trading? Do you truly understand markets? Do you understand the industry? Do you understand like half of what's going on? Do you understand 3% of what's going on in the industry? And if you don't, that's okay. Everybody's got to learn at some point. We're not here to lord our knowledge level over anyone, because there are those that know more than we do. It's to help catch new people up. It's to share, right? This entire podcast series was just sparked by one happenstance. I was out perusing the web, as I am apt to do, and I ran across somebody. I ran across an outfit that said that they were going to train people how to trade. And as soon as I saw the picture, Dan's face starts getting purple. I mean, as soon as I saw it, it's like I go into rage mode. I'm just instantly angry. And in a way, I don't know who to be angry at, although there's plenty of anger to go around. In some ways, I'm a little pissed at newer retail traders that fall for this stuff. But then again, once upon a time, I was one of those newer retail traders. And they're just preying on basically what humans find attractive. This picture, I'm probably even going to feature this as the image for this particular podcast, is of not one, but two private jets and a Rolls-Royce. Now, I don't know. Here, let me go on to my other monitor here. What's the going rate for a private jet? Let's go to the nicer ones, right? Because hey, in this particular image, they have two. So if we're gonna throw in two private jets, why not go for like a and I can tell they're sort of the Lear type, Learjet. Let's go for the Gulfstream, what is it, the G650ER. How much does a Gulfstream G650ER go for? Oh, $66.5 million. So that's the image I saw that sort of sparked this. Because there's this image of, here, two, let's call them G650ER jets. That's $133 million. $133 million. It's like 13% of a billion. Okay? Oh, but that's not enough. That's not enough. They also have, let's just call it a Rolls Royce, right? What's a basic Rolls Royce go for? Oh, $417,000. But hey, you know what? If you're spending $133 million on two private jets, why not throw in a $417,000 car? So we have $133,417,000 worth of transportation equipment. Now, I hope you've gotten your calculator out, right? So I hope you've gotten your calculator out. I'm going to write that number down. I might come back to this later. I'm going to write it down over here on my whiteboard. I highly suggest that if you're a trader, or heck, if you do anything for private, just your own work, get a whiteboard. I've never recommended that to somebody. Yeah. I've never recommended that to anyone. I had to write that down, sorry. And they not thank me for it. The bigger the whiteboard, the better, and get it near your desk. So anyways, yeah, $133 million for $417,000 worth of transportation equipment. And again, keep your calculator on you because we're going to be coming back to that. Now, I'm not naming any names of any outfits that did this, but they have these 2 private jets. That just cracks me up. It's like, one's, let's not just show one private jet on a runway and it's like, wow, look at that thing. No, let's have 2. And why have 2 when you can throw in a Rolls Royce? So, are you serious? Are you serious? The caption on this advertisement where they're going to teach you to trade is how to quit your job and become a day trader. How to quit your 9-to-5 job and become a day trader. And they're going to lure in the hook with you with not one, not even 2 private jets, but 2 private jets and a Rolls Royce. And then I went a little bit further down the rabbit hole. And yes, this subject is going to come back. Oops, sorry, hit my water bottle there. This subject is going to come back around to, do you truly understand investing, trading, sort of what's going on around the industry. And I'm going to talk about different things that I've heard at least, and different things I've seen myself personally. But I mean, just the absurdity of that. They're going to teach you to trade, and the hook to get you to quit your 9-to-5 job is nearly $134 million worth of transportation equipment. My God, that's not even the house. I'm sure if somehow in that picture, if they could have fit in like a 15,000 square foot mansion, they would have done it. I'm sure of it. It just probably didn't frame correctly, right? So, but the whole caption was how to quit your day job, how to quit your 9-to-5 job. And as I was saying, I went a little bit further down the rabbit hole, right? So I start listening to all of this stuff. I think anybody with a brain in their head knows that they're being led in a little bit with the lifestyle stuff. But here's the thing. A lot of traders I've met said, I saw that stuff and I know it was overhyped, but I just figured, that was just lifestyle. But these guys really knew what they were talking about. The people selling this stuff are aware of that. Do you know what I mean? In other words, we all recognize it's stupid on the face of it. But the people that market this sort of thing to people, they know that you're smart enough to figure out that if you quit and what's an average income? Remember, the whole thing of this particular podcast is sometimes you just need to pull out your calculator. The average income in the United States at the moment, just quick Google search, the United States Census Bureau reported in September 2014 that the U.S. real inflation adjusted median household income was $51,939 per year. Okay? So came up by a couple of $100 from 2012. It's statistically unchanged, actually. And we all know that. But around $51,000, $52,000 a year. All right? Some areas it's more because of standard of living and all of that stuff. But that's the average. So, if you're going to quit your 9-to-5 job, you need, on average, and I don't know everybody's situation. Some people may need less. Some people need more. That just depends on your personal burn rate. If you quit your 9-to-5 job, you're going to need income. I know this is very advanced math. I know these are very advanced topics. Yes, I'm being insanely snarky and sarcastic, but I mean, come on. The basics are you're gonna need that income replaced. You're gonna be making an income, right? So quit your 9-to-5 job. You're already in the hole. So we are at negative $51,939. All right. So negative $51,939. All right. So that's where we're starting. Now, when I go to this, peruse a couple of these websites, there's a couple of these folks out there that market themselves this way with big, planes and stuff and say, well, yeah, I know that's all lifestyle stuff and they just got to show that, but they know what they're doing, right? When they start talking about like performance, the performance was so out of whack with what reality of even fantastic traders do. It was insane. No, I mean, it was ridiculous. So we're going to talk about performance here. Basically, they were talking about trading stocks. And the statement was made, you got to work yourself up. You got to build your skill. And when you build your skill, you can be looking at making 100% every year. No, you're not. No, you're not. You're not going to be making 100% every year. No, you're not. I know that fits in very well with this whole paradigm of what did we say? Nearly $134 million worth of luxury transportation equipment. I know the concept of 100% every year fits in very well with that particular paradigm. Unfortunately, that paradigm doesn't reside on this little place that we like to call planet Earth. Listen, there are performance databases out there, and we've mentioned them before, Barclay Hedge or Altegris. There are introducing brokers out there that list various performing programs and performing traders, and you can very easily find out some of the best ones on this planet. Dunn still has a program out there that's listed in Altegris that's destroying the stock market by orders of magnitude, and I believe that particular program had 4 losing years at one point, and it is 4 losing years. And it is still absolutely destroying the, is it beating the market? It's destroying the stock market by orders of magnitude. Like, what's that line way down there? Oh, that's the S&P 500 index. And so, no, they don't make 100% every year. Nobody makes 100% every year. Does not happen. I challenge anyone. Now, can you have a 100% year? Absolutely. And it's even been documented. There's been a couple of traders that have had higher than that. Some of them won records. And some of them, some traders have, had 200% years in a row, which is like, whoa, you're like, that's like New York Yankees level. Okay. But you're not going to have 100% every year, and especially as you start off. And as I was saying, I challenge anyone to find anywhere in any database, any trader that's audited by a third party where they're making 100% every year. Love to see it. Heck, if I peruse over it, I might give them some of my money to trade. No, actually not. I don't give my money to people to trade. But seriously, it's like it doesn't happen. You're lucky if you go into those databases, if you can find 2, maybe 3 people that can hit 25% per year. And that's in something like the alternatives or futures, basically, futures trading. Because you got to understand, all futures instruments, like the E-mini S&P 500 index futures or corn or all of those instruments are leveraged by nature. All of the traders trading them, it's leveraged by nature. They're set up to use the capital that way. which means if you get a very skilled futures trader, you can have higher percentile gains. But even that depends on what exactly they're doing. Are they basing a strategy and only accepting clients of $5 million? They only accept $5 million as the account minimum. And the one strategy that, you pick, or they have available for you, I should say, is going to be based off of leveraging the notional, on a longer periodicity, and therefore the position sizes have to be a little bit. See, it just depends. What I'm trying to say there is I'm not trying to describe all these strategies to you. I'm just saying it depends, right? But typically, on average, over the big average, futures just uses the capital more efficiently than stocks. Okay, so you are going to have higher percentile gains in those sort of things. And even in futures, which, by the way, is a very small market compared to other things like stocks. I've said that for years and years and years and years. You go back and the stuff that I did long before I joined up with Sharp Trade. It's like everybody focuses on the stock market, the stock market, the stock market, the stock market. And it's like, and they'll ask me, how's the market doing? It's like, which market are you referring to? Well, the Dow Jones. It's like, no. There's many more markets than that. There's, you go into interest rates and bonds specifically. I'm talking like cash bonds, not just the futures on bonds, although there's that there. And you include everything around the bond space and interest rates of all types. That dwarfs the stock market. Okay, dwarfs it. And then obviously you have stocks, but you also have the commodities and futures markets as well. And, I've said that for years. So it's like, first of all, you got to decide which market you're talking about. There's spot cash market. So, and I've always said that, you got to understand, something like commodities futures is much smaller and a lot of people don't pay attention to it, but there's a lot to learn from it. It's actually how I got my start was in futures. Even in futures, which typically the percentile number is going to be larger, even in futures, find me just 2 or 3 that can do 25% annualized. Just find me 2 or 3. I think there are 2 or 3 out there. And I do mean 2, maybe 3. It just doesn't happen. This concept of annualizing 100% is so stupid on the face of it as to be ridiculous. It doesn't happen anywhere. And of course, they never mention the issue of scalability, right? There are some processes that you get to be $10, $15 million and you just can't stuff the money into the process anymore. It's just the process has gotten too big for what that process is doing. The capital's gotten too big. So, of course, naturally, they don't get into the issue of scalability. But what's funny about that is this was all stocks. Now, stocks day trading, a skilled stocks day trader can do more percentile-wise. But on average, right, taking day trading out of it, just all stocks trading, swing trading for a few days, which, by the way, I looked at this particular outfit, and that's what they were doing. You're not going to be making 50% a year even. You're not even going to be making, no. Sorry. It's just not going to happen. Especially stocks, because stocks, it's much, much, much harder to leverage yourself. You can do different things in different processes that you're doing. Shorter periodicities, you can do a little bit more if you're really, really skilled. But in stocks, you're not. Stocks, it's that much harder. It's that much harder in stocks because it doesn't use the capital as efficiently. It's much more difficult to leverage yourself as it is in futures. Futures, it's just like, wham, bam, there's the product, and it is leveraged if you take on one contract, more than likely, Even if you have, a $3 million account going into futures, you may not leverage naturally by being an intraday trader or something, but you're going to leverage. You are going to leverage because, it's the whole advantage of the futures market in the first place. It's very safe, sane leverage, but it is structured to leverage. You're going to do it. Otherwise, why not just take your $3 million and go over to stocks? You see what we're saying? The whole point of this is nobody can show me anyone anywhere that's doing annualizing 100%.
And you will notice that I said, and I was very specific, you cannot show me any third party anywhere where somebody is annualizing 100%. You cannot show me that. You can't. I don't want to hear, because this is something I've noticed and investigated with newer retail traders. No, I'm doing it. I just did this trade and I talked about it live and I made 60% on that trade. Hello, stupid. You may want to learn how to work math. No, don't call me stupid because, if you annualize that out, it's like, oh my God. And I've had people do that. It's like, no, I'm annualizing 3,000%. Because what they do is they take one trade or two trades or three trades, which is statistically insignificant. You need about 300 trades just to start to get a good idea. You need 3 years bare minimum. 5 years is preferable of performance to get some sort of understanding of performance of a trader. And you're going to come to me with 3 trades? Because I've had people do that. And it's like, all right, tell you what, I will give you money to trade. I will give you money to trade if you can show me something that's, sort of industry acceptable. And when I actually investigated what they were doing, what they had done is they had taken 3 winning trades and then annualized that out. If I just keep doing that. Come back and talk to me in 5 years. Because that's just stupid. That's like noob retail with dreams in his head of $134 million worth of transportation equipment. It's just dumb. So that's why I say, show me 3 to 5 years worth of performance history. It's annualizing 100%. And you won't. Because you can't. You can show me people that have had a 100% year. I even saw somebody in a database recently that had a 234% year. Those are wildly dangerous, but I'm not going to get into that because that's not the point of this podcast. But you can't show me somebody that annualizes 100%. You just can't. Okay?
So now we've got 2 ridiculous things, right? I had to talk about the rest of the entries in this particular series. Do you truly understand investing? Do you truly understand markets, trading, the industry? I had to talk about all of that stuff for newcomers who are new to trading to get to this section. Don't be pulled in by that garbage. And I want to talk a little bit more about some of how they take advantage of new retail traders. I think if we all sit down and have an honest conversation, I think we know that's all bullcrap. Every bit of this is just absolute nonsense. What is it? Was it, again, nearly $134 million worth of transportation equipment. They've got you quitting your 9-to-5 job, which means you're in the hole. You're negative $51,939 because you ain't got a job now. You don't have the skill of trading, but they're going to show you $134 million worth of equipment. And at the same time, no one anywhere can show me anyone in a database that's annualizing 100% because it doesn't happen because it's mathematically impossible. Now, can you make millions and millions and millions of dollars trading? Absolutely. Like anything else, it's a grind. And the people that are actually grinding day in, day out, they don't sit around and look at pictures of $134 million of transportation equipment. And as a matter of fact, if they do look at an image of $134 million worth of transportation equipment, they do what I do. They start laughing because they realize the reality of it is that it is a day in, day out grind. I've met many wealthy individuals nearly the world over, many wealthy traders. Incredibly wealthy traders, right? Living the dream traders. They can't afford $134 million worth. Like, are you insane? I mean, let's call you a successful trader. Your net worth's $40 million. You'd be bankrupt and in the hole if you had what these people are showing you. I mean, seriously, it's the title of this podcast. Pull out your freaking calculator. It's not that difficult. Literally, you'd be bankrupt. Well, I had $31 million, but now I'm in the hole, what, Yeah, I'm in the hole over $100 million if you do the math. But hey, I've got 2 jets that has ridiculous upkeep. My God, just lease them for God's sakes. Just lease it for pity's sake. But yeah, it has ridiculous upkeep. Oh, and I've got that 413,000 or whatever it is Rolls Royce. And you don't have the skill. I mean, come on. I think on the face of it, we all know this is just ridiculous, right? I dig a little deeper into 2 or 3 of these outfits, and they were like, your whole goal should be, you're cranking along, and it's going to take you a little bit to build up the skill, but you'll get there. They got the pump speech. You'll get there. Whereas nobody's going to listen to Sharp Trade a whole bunch, because we're going to say, yeah, you have to build up the skill, and no, not everybody makes it. Most wash out. This is difficult, But anyways, because why? We just tell the truth. God, what an outlandish concept. Actually tell people the truth that most don't make it. Especially as intraday traders or swing traders, 3 to 5 days, most don't make it. In our short-term trading course, even if somebody decides eventually, listen, this is very difficult, we still think it's possible. Tasty Trade has said this, and we do agree with it. We still think it's possible to self-direct your own investments. As a matter of fact, the first strategy and the second strategy we give, we think are very, very easy to implement, sort of mechanical strategies to operate to where you can direct your own investments and you're not paying somebody else a fee. And we're going to get to fees here in a minute. But especially that first one, if somebody decides, listen, I don't want to do this. This isn't fun for me anymore on intraday trading or multi-day swing trading. We've got a couple of models there as well. It's the very first model and the variations that we show inside of the in the short-term trading course. Okay, so I still even saying as difficult as difficult as trading is for some folks. At the same time, yes, we still do believe that folks can direct their own investments simply because of those beginning strategies and even the secondary strategy that we demonstrate to folks. Just depends on the volatility that you want to choose for yourself, which means you have to know your objective. But anyways, that's just sort of to clear up a little bit of a footnote there. The whole point there is not everybody makes it, is either an intraday trader or a multi-day swing trader. Not everybody makes it, and we just tell people the truth, and that can be verified. I mean, that's just the hard facts of it. Some people do, and if you do, you can make ridiculously good money. But returning to the topic of making ridiculously good money, I'm showing you $134 million worth of transportation equipment, and at the same time saying, quit your 9-to-5 job. But anyways, they go on to say, but you're going to crank up to making the good money, where you're making $300 or $400 a day, or $300 or $400 dollars a trade. You want to come by me again and say that again? And I went back and I listened to it several times, and it was like, yeah, you can make $200-$300 a trade, man, and you're just cranking along, and you're going to make your 100%. Well, as we have said, you may want to pull out your old calculator. So let's say you have 2 trades a day because generally, wow, the market's very generous to you as a day trader, and you're not, generally there's one really good opportunity a day. And I'm not talking scalps. I'm talking you're like in, let's just say the periodicity is 3 hours. Generally, you're going to have maybe at one opportunity. But for the sake of argument, let's say you trade some generous markets, and there are 2 opportunities that last a couple of hours each day, which, okay, every single day. Every single day. Okay, great, wonderful. So what is there, 250 trading days in a year? And so that's, actually, let's not do it by a year. Let's make this easier on ourselves. Let's do it by month. So let's say you make a couple of hundred. According to them, this isn't me, a couple of $100 every trade, and you have 2 trades. And there's 20 trading sessions. We're going to say there are no holidays. That's only about $8,000 a month. And you may think, well, no, $8,000 a month, man, I could do that. I could do that. And Dan, if you take that $8,000 a month and multiply it by 12 months, that's $96,000 a year. So I've made more than my, the $51,939 that I gave up. I gave up a job where I had an income of $51,939, and now I've got $96,000. Well, if you have frequented Sharp Trade LLC, you are going to know what's coming next. You made $96,000 on something that doesn't happen, by the way. Nobody wins every single day. First of all, doesn't happen. We've already established that. I challenge anyone to show me anything in a third-party industry-respected database. Industry-respected database. Because if you're that good, you're going to have no problems raising capital. I challenge anyone to show me anybody that wins every day, never has a down month. The best traders on this planet using the most capital-efficient products on this planet have down months. Every single one of them. And I can't think if I've found... Now, there are a couple of programs I know of that have never had a down year. There are a couple of them out there. But most wildly fantastic traders, like I said, Dunn's one program. There's a program that's listed in Altegris. If you go to the Altegris 40 of the manager rankings, there's still a program in there. And I think it had, I want to say 3-year down years or something. And it's still beating the stock market by orders of magnitude. Please see the the entry before this one in this series on do you understand how returns work. So I'm not going to repeat all of that here now, but some of the best traders on this planet don't make money every year. I mean, if somebody's telling you that they do make money every single day and every single month and every single year and making 100% years, not only are they not going to have a problem raising capital, right? So they could go the route of, well, I'm going to raise some capital and trade that, because that's the real name of the game, is getting the assets to trade. It's a long grind to do it yourself. You can do it. You can definitely do it, but it's a longer grind. So some people say, well, I'll just raise the capital. Some people don't even need to raise the capital. Some people don't even need to raise the capital. I talked with a trader years ago. The capital found him. So you don't even need to go sometimes through the act of work. If you're really that good, then you don't even need to raise the capital sometimes, although you can go that route. Sometimes the capital finds you. Literally, I knew a trader I spoke with years ago. What's he doing? He's just trading his own thing, turning statements into an accountant for an accountant to do it, and the accountant's like, I think there's some folks that might want to talk to you. So like I said, sometimes the capital finds you, right? So, yeah, I mean, come on, let's be realistic here. Let's not be a bunch of 14-year-olds, dreaming of the lifestyle stuff here. You can have the lifestyle stuff, but don't sit there and tell me that you're making 100% every year. Don't do it. So that's first of all. First of all, what we just described, getting that $96,000, never, ever happens. The second point is, let's just say it does. Let's just say that it does. That's not $96,000 worth of income. That's $96,000 worth of assets. Far different thing than income. Number one problem that many folks have, and I don't mean just that want to be investors and traders, I mean just in general, is they think that a pile of money is income. They confuse a pile of money with income, and it's not. And you see that everywhere in society. It's not just trading. It's just a real problem that people have throughout society, that they think $3 million sitting in a pile in a bank somewhere is income. No, it's not. It's assets. Accounting 101, income statement, balance sheet, cash flow. If you have $3 million sitting in a bank, that's just assets. That's not income. I mean, we've all heard the stories, right? There was a guy near here, near where I live, won the lottery, all right? Won the lottery. Fantastic. Good for him. Glad he's got a bunch of money. And we've all heard the stories, and this guy was no different. He joined the long list of, he ran out of money. Well, how is that possible? How is it possible to have $3 million and then you don't have anything? It's possible, and it will continue to happen again, because the general population does not understand the difference of having a pile of money and having income. It's that old scene from The Gambler, right? Any idiot gets up $2.5 million, knows what to do with it. You buy a house cash, you get a piece of crap car that's nearly indestructible, and you put the rest in the system for 3 to 5%. What is he saying there? 3 to 5% of income, so that you have an income coming in. That's what that's saying. If we get into this in greater detail in Trading for a Living, Income and Wealth. So do a search for that podcast. It's a podcast. Trading for a Living, Income and Wealth. We've talked about this for years. I've talked about it for nearly 10 years. There is a difference between assets and income. And again, pull out your calculator. On that particular topic, this is what I wanted to say, because while they're showing you $134 million worth of transportation equipment, let's say you make $1 million trading. Woo, yay you. Or let's make it a little more realistic, right? So let's say you make $837,000. So $837,000, and that's in assets. So if you do this wisely and you set that up for income, let's say that you can make 3.5%. So you can't touch that $837,000. It's all well and good. It looks fantastic on a balance sheet. But if you're going to continue to generate 3 to 5%, well, then you need to keep the $837,000 there. You can't touch it. You've set it up. That's where the yield is pulled from, for pity's sake. But let's say you can do 3.5%. 3.5% on $837,000. First of all, you look at your balance sheet and it's like, wow, look at me. I had $837,000 worth in income assets. Do you know how much generally income a year you're going to be pulling down for that? It's very simple. It's the title of this entire podcast. Pull out your calculator. You're going to be pulling in about $30,000 a year. You're going to be in the lower end, okay, looking like everybody else in society. And that's doing it very intelligently. Now, I'm not saying this to discourage people at all. You can get there, because the nice thing is when you're making $30,000 a year off of the $837,000 in income, you can continue grinding that forward, and B, some people can live on $30,000 a year. People, the majority of, a lot of people in the United States do it every single year. So then your time is yours. You can gather more assets and grind that up, and you have some freedom. Okay? That's the way to actually do it. It's not this fairy tale dream of you're going to make money every month, you're going to have 100% years, and you can take $59,000 out of your $96,000 pile. That's not the way it works. That's not the way any professional trader treats it. And we'll get more into actually how to do it here in just a bit. But that's actually the way it's done. You get $837,000, however you get it, through businesses or whatever, and you start setting that up for income so that your time is yours, which to me is what it's actually really all about. So going back to the calculator, 134 million, let's say 417,000, because you can't forget that Rolls Royce, can you? You can't forget that. So 134,417,000. Where are we at? Let's just call it an even 30 grand. you're still short. You're still short by $134,387,000 of having two G650 ERs and a Rolls Royce. Come on. I mean, come on. Yes, you can get out of your 9-to-5 job, but it's going to be a long grind. And you shouldn't be looking at the two private jets or the Rolls Royce. Anything in life, this is a disease of mankind, just a small little topic, let me say. Anything you want in life is going to cost you time and work and pain. Here's where I'm about to get really, people are really going to get ticked off with me. There's a real reason why you can never get rid of the wealthy. There will always be the wealthy and the poor. You know, I'm not sure if people realize this, but Jesus of Nazareth actually said that once. You will always have the poor with you, and you will always have the rich with you. Always. My personal belief as to why that is, 1% of the people out there really want to work and grind and do their own thing, and no matter the obstacle, they figure out a way around it, and 99% want the easy way. I realize I'm probably going to get a ton of hate for that, but I don't care. It's what this podcast always is. It's my thoughts, not yours. And it's not supposed to be easy. And you're not entitled to join that 1%. Nobody owes you anything. Well, they did this. Who cares what they did? Grind your game. I personally believe that's one of the diseases of socialism. Socialism teaches everybody, it can be easy because the way we'll do... Red alert. Screw the politics. Who cares about the politics? Red alert. It'll be easy because. That's the red alert for Dan. I don't care about your politics, and I don't care about anybody's politics. The red alert for Dan is it should be easy because. Anything you want in life is going to require discomfort and pain and work. Anything. That's the way the universe works. Not politics, not economic systems. That's the way the universe works. Our bodies, right? I'm in this high-intensity workout thing at the moment, which is a bit difficult because I've got some busted-up ribs. But the ribs are healing, and I'm trying to get back to this high-intensity workout. Why? Because people want a great, beautiful-looking body. Well, if you want a great-looking, beautiful body, guess the way the universe works? You have to work. And on your rest days, there's going to be pain. You're going to be sore. And you have to continually do it. You can't work out one day and then, wow, look at all these results. You can't work out for 1 week and say, wow, look at my ripped body. I look like Chris Evans. That's not the way the universe works. The way the universe works is if you want something worthwhile, I'm not saying, no, we need the evil of the world to enjoy the good. I think that's stupid. Really? We need Adolf Hitlers to enjoy the good? I don't think so. I think if I've never experienced a regime like Adolf Hitler, but however, I can enjoy the discomfort and the soreness and the pain of my body when I'm working it out, and I enjoy the good. I enjoy, wow, look at that. I'm starting to see some results. I'm starting to see better results. Wow, I've been at this 2 years. It's starting to even get better. Wow, how can I do something different so that my body doesn't get stuck in a rut and I'm not in as much pain? I've got to change something. I've got to adapt because my body has adapted to what I'm doing to it. Right? I can enjoy. I'm trying to create some discomfort so that I can enjoy a result. I don't need a Pol Pot. I don't need to go to that extreme to enjoy the good. I don't need that, right? But you do need some pain and discomfort, and that's in anything. You want a great-looking body? Put your body through some pain and discomfort. And you're going to have to discipline yourself. You want a great marriage? Let me tell you what a great marriage is all about. Because I think I'm just married to the best person in the world. You get myself, who every time my wife does something that pisses me off, I've got an entire sermon, because of the way my mind works, of an outline of things that, why did you do this and why did you do that, and it's more logical to do this, and da-da-da-da, and go down the whole thing, and I have to dismiss it. I have to have the self-control to dismiss it and not get in this tit-for-tat thing I see that people get involved in marriages, and they go tit-for-tat until basically they're both unhappy and they get divorced. Right? So a good marriage is you got myself, and I got this whole outline of, like, she's absolutely driven me nuts. I can't believe this. And I just have to have the self-control to dismiss it. And let me tell you something. A good marriage is not just the husband does that. My wife has this entire thing, I'm sure, all the time in her head of, oh my God, Dan did it again. I can't believe it. And I've talked to him about how that annoys me, and she's got the whole outline in her head. And you know what she does with it? She just dismisses it. It's uncomfortable. You wish you could just get into the tit for tat thing, but that's not how a good marriage is formed. It's formed by the discomfort of both people dismissing. Two good forgivers, have you ever heard that? A marriage is comprised of two good forgivers. What I'm saying here is I'm not giving marriage advice. What I'm saying is anything worthwhile in life, whether it be money, whether it be family, whether it be relationships, whether it be your body, spirituality, any blessing you want in your life requires work and discipline. So I'm saying you can get to living that life. If that's what you want, and you want one level of wealth, whatever, you can definitely get there. But it's going to take work. Realize what these people are doing to you. And they've gotten more sophisticated, which we'll get to here in just a bit. But I'm just saying, it's going to require work. It shouldn't be easy. Anton Creel once said this. He used to be a trader back when there was, trade desks for the banks and stuff, but he's gone on his own and he teaches now, right? Very, well-known trader. I had a presentation, so I'm not the first one saying this. I just don't like to say things and it sounds like I'm the first one saying this, although I have said this now for 8 years, 9 years, actually longer, probably 10 years, I've said this. Income and your trading account are two totally different things. No professional trader looks at their trading account and says, I'm going to pull huge pieces out of this to pay me an income. I mean, there's prop something else. That's not what I'm talking about. What I'm talking about is you guys that are sitting at home as retail traders thinking, I'm just going to pull money out of my account. No, you're not. There have been scholarly papers written on the concept of the mathematical risk of ruin because you are going to be introduced to drawdown. We had an entire podcast on this topic. It's mathematically proven scores of times. It cannot be done. You can't take that $96,000 and live off of it. You can't. You could emulate the prop model and take a percentage of your profits. And a small percentage of your profits regularly. And that's if you were consistent, which most new retail traders can't even get to the point of consistency, much less even annualizing 20% per year. If you can annualize 20% per year, you're a rock star, and you shouldn't even be listening to this, literally. You already know all of the concepts I'm talking about. But no professional trader takes from their pile their income. They generally set up something called an income account. That's why we're running as a free project, completely free. We don't charge for it. The Sharp Income Project is to show people who don't even have anything to start how to start growing a little income account, and that it can be done. That's actually the point of it, that it can be done. And I'm demonstrating it. But that's for income. Okay? So you didn't make $96,000 worth of income. You did a great job and you made $96,000 worth of a pile of money that if you take anything out of it for income, let's say, you're just a stupid new retail trader. We go over this in our short-term trading course. But you take out $59,000. Well, now you've only got $37,000 in your trading account. What happens when you hit, like some of the best traders on this planet, a period of drawdown? Let's just say you lose great drawdown numbers, right? I have some of the best drawdown numbers out there, period. Let's say 13%. That's your maximum lifetime drawdown. You hit it. Well, guess what? Now you're down to, $32,000? $32,190? So, I mean, this is the way it works, okay? Professional traders, back when the banks traded, any institution, you know how they make the millions? I said this 6 years ago. I'm going to say it again. Fees. Maintenance fees, which have come way down over recent years. Maintenance fees. Boom, fees. Gather huge assets together, charge a fee. And you can charge a fee because you've proven that you're good. That's where professional traders make their income is from the fees. No, I'm not the only one saying that. As I said, if you want to listen, go listen to a presentation by Institute of Trading, Anton Creel. Anton Creel will tell you the same thing. He goes through the whole 9 yards. This is not that particular podcast that we had, trading for a living, income, and wealth, but I'm just restating what I said in that entire podcast. Fees is how the money's made. We also went over some of these concepts in the very first Sharp Income project entry, the very first one. You go to almost any Sharp Income project text entry we have on the website, there should be a link to the very, very first one, getting started with a free, Sharp Income project entry. And we go over all of the concepts there as well. And when the pile is big enough and you have proven your consistency, a small percentage of the profits. Small percentage, not of the total account, small percentage of the profits. That's critical. Because people are like, okay, so you make $96,000 in a year, or let's say your account goes from, $59,000 to $96,000. Okay, so how much of that $96,000 I can take out? No. The part that you increased from $59,000 to $96,000, you take a small percentage of that if you were using something like based off the prop model or other professional institutions, the way they charge. My whole point here is professional traders don't just take huge swaths of money, their 59 grand out, to pay their income. That is your pile of money you want to grow bigger and bigger and bigger and bigger. Bigger, right? And like I've said, like Anton Creel, like many other professional traders have said, if you want an income, which you need, because even wealthy people need to pay the cable and the internet and the heating and, lawn care and your cell phone and put gasoline in your vehicle. Oh, your $418,000, Rolls Royce. You still gotta pay for crap. The fuel that you're gonna put in the two G650 ERs, that fuel's a bit expensive. So you need income is the point. So all professional traders know this. You have something set up for income. Some people like myself, not everybody, but some set up income accounts. Right? Dividends, a coupon off a bond or something, something like that, and they set that up for their income. Okay? This whole concept is what we're saying, that you're going to start trading. Just pull out your calculator, for pity's sake, people. Just pull out your stinking calculator, go through some databases, go through Altegris, go through some introducing brokers that list a bunch of different, I was just on one the other day, that list a bunch of different programs. Look at some of the best performing guys out there, right? And just look at what's realistic. Heck, don't even look at the top guys. Look at the middle rung. You can still make ridiculously good money if you were in the middle. So look at that, and then just pull out your stinking calculator and start, come on. Start working the real numbers, not what you want, what's realistic. So what did we say we were at? 32,190. Let me write that one down. So anyways, it gets better than that, believe it or not. This particular outfit, they like to show themselves in pictures, and I'm probably really going to piss some people off, and I really don't care. I'm just so sick of seeing retail traders yanked around. They show pictures of themselves in these private jets. Of course, if they're in the private jet, you can't tell if the thing's parked on the ground, right? Or if it's actually in the air. And some of them, it's like, no, look, out the window, I'm in the air. It's like, yeah, Photoshop's a wonderful thing. First rule of finance, don't trust anybody. So it's not enough. So in other words, when I'm looking into this outfit, it's like, whoa, back up. First of all, I know how to use a calculator. I was taught that in elementary school. Second of all, I can work the calculator, and the numbers don't add up. if you're making $200 or $300 a day, you're definitely not gonna own two jets, and by God, you're not gonna be flying around because you're not gonna be able to afford the fuel. Because even with ridiculously good performance at this point, ridiculously good, doing it the idiotic way that retail traders think it's gonna work out for them, you're staring at $32,190. That's about how much it costs. It's a little cheaper than that. Just a little. $32,190 that you're all proud of, that's how much. About maybe $12,000 less or a little bit less. But I'm telling you this, okay? This is fact. That's about how much it costs to lease, like charter one of these planes to fly you around for 1 hour. It can cost anywhere from about $9,000 to $15,000, $20,000. It just depends on the plane. So, I mean, if we were to do that, we'd be down to about $5,000. And you've got to live for the rest of the year on $5,000. Just pull out your calculator and start looking at what some of this stuff costs. B, what's fantastic performance, and what if you did that? What if you were like Dunn? Dunn's one program, I should say. What if you were like Dunn's program and had 4 down years and you're still beating the stock market, but you got to eat? So even with stuff that's completely unrealistic, we're not taking the flight on those two 650 ERs. We're just going to sit there and watch them on the runway. You're only staring at $32,190 with unrealistic performance, way too high. And then they're going to show you pictures of themselves flying around as if you're going to achieve that on $32,190. I mean, are you serious? But it goes beyond, you need to be aware, it goes beyond simply, we can all recognize, we pull out our calculators, that stuff is just lunacy on the face of it. It goes beyond that. There are outfits out there now saying they're going to train you how to trade. Okay? And you can keep a percentage of the profits, right? And they're interested in really making sure that you become successful. No, they're not. No, they're not. They're not interested in you becoming successful whatsoever. As a matter of fact, they may have a vested interest in you not becoming successful. Here's something else about the industry to catch folks up, right? When you have an institution, let's say somebody went out and got some of their series licenses, and they've got this institution, and so they're going to bring traders on board, and I've seen 3 of these. They're going to bring traders on board to train them, right? So they're going to bring you on board to train you, and you get to keep a percentage of the profits. They'll even fund you. Whoa, what could be wrong with this, Dan? What could be wrong with this particular scenario? Well, start doing some digging. Start asking around about some of these institutions. They go by a particular name that I'm not going to name here, and I don't mean the name of the institution. I mean there's a name for this kind of institution. Look it up yourself. This isn't Dan's opinion. This is widely known stuff. There's a particular name for that sort of outfit. So we'll even fund you. And no, I am not talking about proprietary trading firms in general. A specific type, perhaps. But no, I am not speaking. There are some excellent prop outfits out there. Very hard to get into anymore. Very difficult to get into. Because there's just no vested interest in them really taking on beginning traders anymore. If you're not familiar with what a proprietary trading firm is, it's quite common. Sometimes I just assume people know what I'm talking about when I talk about it. But I do have to remember that some folks are new. Basically, proprietary. What does proprietary mean? What does that word even mean? It's like, it's ours, right? So it's sort of a way of saying this is a trading firm that's doing its own thing. It's got its licenses. Basically, the sort of setup, and they've got licenses, and this is not, as I was trying to say before, I'm not slamming proprietary trading firms at all. There's a particular new subset of them that's really taking advantage of retail traders, and that's what I want to get to. However, I'm not trying to slam proprietary trading firms. Matter of fact, it used to be a great way you could get in and start in on the business and really do well. And you can still get in, but it's very, very difficult now to get into a good proprietary trading firm. But basically, you get in with a proprietary trading firm. Sometimes the prop firm is what we call them. Sometimes the prop would give the new trader a little bit of money and then train them a little bit and then say, if you can make any profits off of this, some of those profits are ours. Okay? I'm not slamming that model at all. However, there's a little bit of a baby that's been born within that subset that I want to talk about now. Okay? Because as I said before, how do firms make money? Fees. And it's no different with prop trading. Okay? So they fund you. I was like, well, how could this be? How could this get any worse, right? They put up some of the money. I have to put up some of the money. And then they're going to train me how to trade. And I'm going to make a percentage of the profits. And then, okay, let's just say I understand all that flying in a plane stuff's just complete nonsense. And by the way, there are traders that fly in planes, but please keep in mind that can cost anywhere from $9,000 per hour if you don't even own the plane to about $9,000 to $20,000. It just depends on the plane that you're chartering. Oh, and that's per hour. So that's per hour. So you got a 5-hour trip, take $12,000, multiply it by 5. Okay? So, again, pull out your calculator. But anyways, let's say you understand that's all nonsense. You understand they keep putting those pictures of themselves out flying around, and you understand it's nonsense. Here's what you need to know about the structure of what you might be getting involved with. You get in board, and there's plenty of people out there that have spoken about their experiences. So this is not opinion. You can go out and read it on the net. They quickly discover they throw you some 2-bit trading system that you could have read about on your first day and say trade. And the person, and all of these reviews, and there's different websites out there that review some of these places. Just look up reviews on them. They'll tell you, man, I went in there and I was expecting to learn how to trade, but they weren't really training me that much. Really? How curious. They really didn't seem that interested in really helping me succeed. You don't say. Well, again, as I was saying, let's say you get some of your series licenses and you go out and you have set up a legal structure, by which illegally and in compliance, traders can trade under you. Some know this is prop, but there's many different varieties of prop. And I'm going to discuss only one of those varieties now. There are some ridiculously fantastic prop outfits out there. Wonderful. But they've gotten harder to get into because there's no real reason for them to take on the risk of accepting somebody new. They've matured, right? They've matured. They started off and not only is prop a good deal, I've known about prop for a long time. I didn't know until some years ago that there was remote prop. You could do it from your home, right? Wonderful way. These proprietary outfits got started, but a lot of them have matured. So the whole concept of taking on, if it's a good prop outfit, the whole concept of taking on a brand new trader is a whole risk endeavor for them. We don't know if this guy's going to do something idiotic. We don't know him. We don't know his performance or her performance. We don't know if she is incredible and could be the next Cohen, or she's a disaster and we're going to rue the day that we ever met her or him. It's a complete gamble when they've already matured. So do you see? It's a whole new risk endeavor, and a lot of prop firms are saying we don't really need the risk. We're doing great. We're doing, we don't. You can get to a level where you're no longer hungry, or you've matured, right? It's like we don't need it. We don't need that risk. So that's sort of the good firms. If you're looking at prop, and there's nothing wrong with that, if you're looking at prop trading, understand that that's sort of the environment you're looking at. A good prop outfit should not, a really good one might be looking at you with sort of like I don't know if we want you. Okay? So just so you sort of know the environment. I mean, I hate to say it, but I've heard that from like 9 different people. Okay? 9 or 10 different people that it's almost gotten near impossible to get in with a prop outfit any longer for new people, for like the beginners. I've heard that time and time and time and time again. And many prop outfits, as time has passed, well, they're out of business. The ones that are in business really aren't hiring beginners. As I've said, I've heard that's just almost commonly known at this point. You know, and I looked at prop for a time. A problem, I'll just go ahead and tell you what the problem I ran into is my performance is ridiculous. I even had one guy tell me, he's like, wow, that is seriously impressive. And I'm not just saying that. I took a look at this myself. That's seriously impressive. But what you're doing, we can't really fit into what we do. You know, when we dug into it, I'm going to say that your performance is impressive, but some of your performance came from instruments that we don't trade, and then we have to start disassembling your entire process of what you're doing, and that's just not what we're into. I wish you the best because your performance is so well, but you know, I just ran into that time and time again, that the way I built my performance and that it is so good runs into this problem where you're not going to find a prop outfit that'll take you on doing that. So I'm not trying to discourage ones from prop. I'm just trying to describe the environment, things that I ran into, and at the same time, things that I've heard, right? And at the same time say, no, there are still some good prop outfits out there. There really, really are. Whether accepting new traders or not is a difficult thing. But no, I'm not talking or trying to slam prop. So, I mean, you know, that's on the legit outfits. But there's another variety out there that I want to talk about that's still running around and you still see them. Completely legal. I did not say illegal before. No, they have set up a very legal structure. It's in compliance. And they bring you in, right? And they're going to train you how to trade. And as we were saying before, you read the reviews of people that get involved in this stuff, and it's like, wow, this isn't making any sense. Well, you just do a little bit of digging, a little bit of reading. You're going to find out very quickly that, wow, for some reason the commissions are pretty high, so it's a little bit harder. You know, but they're not too bad, but they're pretty high. Really? Commissions are high, huh? I mean, you can read this anywhere, you know. I ran across an outfit like this, I want to say about 6 months ago. Somebody else put it this way, and I thought it was a very good way to term what they were doing. They're basically arbing losing traders. They're not interested in training you how to trade because that's not really their business model. All right, I hate to say it, but it's not. You know, I heard of one deal, I couldn't believe it, where the person had to put up some of their money. The commissions were really high. The commission, you know, the commissions on a per trade basis. The person was required to make $5,000 a month. Now, this is a beginner. Like $5,000 a month isn't a lot, but this is a beginner. And so they had to make $5,000, but they didn't make the $5,000, right? So they're required every single month to make $5,000. Good luck if you're a beginner. Good luck. But they're required to make $5,000 every single month. And then, if they go beyond $5,000, then they get 30% of anything over $5,000. Do you understand? So let's say this very beginning trader makes $10,000. Then the outfit would keep $5,000, and then they would get 30% of the other $5,000. Do you understand? With higher commission, like the commissions on these trades are pretty high. When you execute the trade, it's like, man, why is the commission so high? And many people just everybody just washes out of these deals, right? I'm telling you, do just some searches. Prop outfits. Let me think. How would you search for it? Just a simple Google search, something like higher trader prop percentage of trades or something like that, and fees. Put fees in there as well. But anyways, first of all, that's one of the crappiest payout deals I've ever heard of. Second of all, you're already putting up some of the money, which now they have that money. And those commissions, which are high, as you're executing these trades, well, yeah, because that's how they make. It's like, well, then how does this outfit make their money? That's how they make their money. What did we say in the very beginning? What did we say? How many institutions make their money? Fees. Fees, that's how they make their money. And it's not just commissions. I don't mean to say that they're just ramping up the commissions. Many different firms do it different ways, right? They'll put up 1,000 and you got to put up 4,000, and you think that's a great deal because somebody else put up $1,000. But the commission structure is a little higher. Oh, and there's also a seat fee. Seat fee, what's that? Well, to maintain your seat with them. So there's a seat fee. There's all sorts of little fees, ECN fees. Right? I don't mean to say that it's just based off the commissions. There's all sorts of little tiny fees, and they're just little tiny fees. But let me tell you something. Those little tiny fees have been worked out to mathematical precision of what they are doing. They also know mathematically how many traders fail at what they're doing. So this particular blend of outfit, they're going to make their money, and that's actually their business model. You understand what we're saying? They make money off of the commissions of the trades you make. Well, how's that work? Well, they've worked out a little deal, and this is not illegal. There's nothing illegal about this. It's very legal, very legit, and I think in the right circumstance, proper. They work out a circumstance with the broker or however their institutions and the various institutions that they're executing with, that, okay, our commissions are going to be $1 round turn. However, we're going to trade, make sure that every time our trader places a trade, he gets charged $9. And, come on. Think about it realistically. It's like, wow, that $9 commission is rather high. Yeah, it is, isn't it? And other fees can be ramped up to where the trader on the prop desk is actually paying a lot more than what the trader, the actual prop outfit is paying. And guess who's pocketing that? Quite a few people are pocketing that, and that's where they're making their money, because investing and trading is very much, the entire industry is a fee-based business. So they're basically making money off the fact, and have figured that some people are going to win, which I've got something to say about that here. They're not really too interested in seeing people win, but they're just basically arbitraging losing traders, because they know the percentage of how many traders don't make it. And I'm not saying like the whole business is a fee-based business and you got to learn how to generate fees. No, I'm a trader, and I'm a trader with a great track record, and I think that's what it has to be about. But a great trader with a great track record, if he's working at a family office somewhere, needs to be paid, right? And you figure out ways where, okay, that big pile of money is kept safe, but they're paid for their skill, which they should be paid for their skill. But some people have taken, okay, here's how these really great traders are being paid for their skill, and they've exploited that. That's what we're saying. So they've taken the fee structure and simply exploited the fee structure, and they have no interest in making sure that you turn into a profitable trader. And I do want to stress, this is not everybody. This is a minority that we're trying to make newer retail traders aware of. And as a matter of fact, there's this one guy out there, right, that just loves to... I ran across him about 5 months ago, maybe more, maybe 9 months ago. And, he's an eloquent speaker. Very eloquent speaker. And people love to listen to him talk about markets. And he had a setup similar to this. And even some guys that I've tried to help over the years, they were listening to him. And I'm like, don't you see what he's doing? And then he came out with this entry that I thought hilarious. It's like, guys, just pull out your calculator and look at what he's doing. Just pull out your stinking calculator. I mean, yeah, it all sounds wonderful, but then he comes out with this. It almost sounded like what happened is he found himself a good trader and somebody that was making profits. And his whole eloquent video speech or podcast or whatever you want to call it was on how, you know what your real problem is? And this, I swear to God, this was the title. I'm not making this up. Your real problem is you're consistently making profits. What? That's the problem? Oh, okay. I have a lot of problems. I've got, I've got aged parents now. I've got loved ones that are suffering. I've got some problems in life that rich, poor, doesn't matter who you are or where at your station. I've got some problems in life, but I didn't know that one of my problems was that I'm a consistent trader. And he had this cockamamie, bullcrap, idiotic thing going on and on about, consistency, he was just rambling for most of it. But it had this common theme of, you need to regularly go through these tough periods. Like regularly. You need to always be struggling, not, the discomfort and the psychological discomfort. No, you need to have consistent losing periods. What? Where it's really, really difficult. If you're a consistently profitable trader, then that's a problem. But what was funny about it is, of course he thinks anybody that's a consistent trader under him is going to be a problem. It's going to be a problem for him because they're going to start making less trades. They're going to become more judicious. Sometimes I'll come into the market. I've come into the market several times lately, and there's one particular market I'm looking to trade, and I looked at it, and I looked at it, and I looked at it, and I stared at it, and I stared at it, and it's like, I got to sit on my hands today because there's just nothing to do there, right? Well, of course somebody's getting a percentage of the capital that you put up, and that's his now. So he can even, you put up 5,000, I'll put up 3,000. Whoa, my God, this sounds like a good deal. You're really going to put up 3,000? And I talked to this guy that started 2 days ago, and yep, he really did add 3,000. Of course, he's going to make so much more than that out of the entire pool. Trust me, he's figured out the math of it. Because he has worked out the percentages and pulled out his calculator. First of all, of course such a guy is going to think that consistency is your problem. Because you're going to become more judicious with your trades, maybe not trade every single day. Although there are trades many days. It just depends on your process. But of course he thinks your consistency is a problem. He ain't getting paid. He ain't getting paid unless you're clicking that little mouse like a monkey in a crack cocaine, one of the scientific experiments where they put the little monkey in and he gets his little fix of cocaine if he hits the little lever. So he just sits there and hits that lever. That's what he wants you to be doing all those trades, man. He wants you to be clicking away. You walk in someday and you decide, there's nothing here. I'm just going to wait till tomorrow. He ain't getting paid. Okay? And that's the way a lot of these outfits work anymore. There are really good prop outfits, but they've gotten to be nigh on impossible to get into. There's many other structures by which you can professionally trade, right? Go work at a hedge fund. There's just, you know what? I'm not going to do everybody's work for them. But there's many other structures where you get in and you make ridiculous money. So I am not warning ones away from investing in trading. Then you cannot become, a multi-millionaire based off of investing in trading. I am not saying that at all. But somebody says they're going to train you how to trade. You got to put up some of your own capital. The percentage of that has been highly worked out. You figure out how many, the percentage of traders that don't make it on short-term trades on a single process. That's critical. and they're showing you $134 million worth of transportation equipment. They're showing themselves flying around in jets. None of what they're saying matches up with realistic performance. You look at the deal, and man, those commissions seem a little bit high, but I think I could make this work. Well, it's not just the commission fees that you need to be worried about. Actually, their real goal would, in that sort of structure, their real goal would not that be that you fail. It's to keep you encouraged, to sell you the dream, to sell you the lifestyle, to show you all this stuff they're enjoying, and really pump you up. Like, oh, you can do it, you can do it. And then for you to be sort of a flat trader that doesn't really make consistent profits, but they don't want you to fail either. Baby, they want to churn and burn you. Stay flat, please, because that just means you're going to keep trading. They're going to keep they're going to dangle the carrot in front of you. You're not going to be making consistent profits, and they're going to be getting paid. They've taken an excellent, legitimate pay structure for wildly profitable traders who should be paid for their skill, and they've exploited it to their benefit. All right? Put the whole picture together. And honestly, that's how this whole series began. This whole series of, do you truly understand investing? Do you truly understand trading? Do you truly understand markets? I tried to make this one podcast months ago before we started this as a series, and I realized I had to explain so much about the way investing and trading works that I had to make a series out of it. But literally, that picture with the quitting your 9-to-5 job with $134 million worth of transportation equipment. That's without the maintenance, because trust me, the maintenance cranks up way higher than that. We're training you how to trade and talking about making $200 a day. And there's a fee structure. That's when Dan started seeing purple. Like, that's when my face went purple, and, it's like my neck is bulging over my collar. It's just like I'm furious. Okay? None of this has been information to lord it over anybody. It's to fill in the pieces for you so that it's a little bit easier as you make your way. And yeah, hopefully, if you have that goal that this is where you're going to make your money and wealth from, absolutely it's possible. Just be aware of the way the industry actually works is what we're saying. And, be aware of how you can get taken for a ride. I've heard of payout structures that would actually blow your mind. Absolutely blow your mind. I heard of one where there's no payout structure to you at first. You're interning as a trader, and we're going to see if you like it. But you have to put up some of your money to intern, and there was no sharing of any profits made. I mean, come on. What we're saying is be aware that segment out there exists. We're not saying it's everything. As we said, it's a legitimate pay structure that is exploited by a few. And just pull out your calculator when you're presented with something, okay? And maybe have this information in mind as well. And the information earlier on in this series that we brought out is to the way the way returns actually work. Who are you listening to? Ideological reporting, keeping your bias out of your trading, your personal biases and things like that. So, all right, hopefully this podcast, this whole series has been of a benefit. We hope it has, and that's why we've put it out there for free, not charging anybody for this information. Just be aware. And it is what it always is. It's simply been our thoughts. Now, before we end this podcast, we like to let ones know what Sharp Trade offers. We offer quite a bit for new retail traders. There is, first of all, daily text entries that we don't have to put up a lot anymore because the entity of Sharp Trade LLC itself is now self-sufficient. As the entity itself, it's sort of there. But we want a lot there for new retail traders because, as this whole series has pointed out, it really aggravates us when we see retail traders getting yanked around. There's one of two reactions. Either one, we are laughing and wiping tears out of our eyes when we see some of this stuff, or two, we're not laughing and wiping tears out of our eyes. Our neck is bulging and our face has gone purple with anger. So It's there. There's a lot of free text entries there for you to peruse through. We talk about the difficulties of trading. There is a free Sharp Income project. So with the free Sharp Income project, most of the Sharp Income project text entries, we include a link to the very first Sharp Income project entry. It says, okay, this is going to show, basically starting off with only $500, $25 a week, how to grow, or it's going to show and demonstrate live in real time, tracking it out week by week. None of this before, after the business. Oh, if I would have bought that. None of that crap. No, tracked out week after week after week, looking over our shoulder. Each entry links to the next entry. It's this constant ongoing thing, completely for free, of growing an income account. I think the yield right now is up somewhere near 4.77% yield. Right? But it's still an infancy program because we're showing, yes, you also have to grind. And here's some of the things to think about, right? And it's all free. And it's not necessarily trading, though there is a small segment of it if you go through the whole history of the Sharp Income project. But it's free. It's completely free, and it's there for new retail traders to follow along. Okay, that's just one thing we offer. There's also all the many other text entries that we offer. We just our thoughts and what we're thinking, and that's all it ever is. Again, for free. We have 3 free courses. How to begin with investing and trading. Completely free. We have money management for investing and trading, which is basically the mathematics of profitable trading. Trading is math. Much of it is just very, 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 very simple math. We're not saying you have to be a quant, just very simple math of investing and trading. And then we have another playlist of trading psychology and emotional discipline, because not only is it the math, your brain, your psychology has to be strong enough to perform the math, which is sometimes a trick. So 3 free courses. And as a matter of fact, what I think I would like to do with this whole series, do you truly understand investing? Do you truly understand trading and markets? I think I'd like to put this series of podcasts inside those educational series, because this has been for free. We offer podcasts for free. Okay, there are 3 premium products. There's a valuation investing course. There's so much inside of that thing. It's crazy how to evaluate, how I evaluate stocks, how I sort of look at stocks, stock analysis, a model. If you go to the forums for the valuation investing course, I even talk about a second model, and I'd like to insert that video in there for longer term, sort of buy, hold, and review valuation investing. If you consider what's in the forum now, there's actually, 2 models presented there. If you go through the entire course and then you go to the forums and look at that like a second model or a new video that we're going to insert, you'll see the second model. You'll be able to put it together with just that. There's also short-term trading, a short-term trading course with many models, but really how trading works. There's so much in that particular series. And then we have the supplemental kernel of information on the forums that gets into, it's almost a whole other course in and of itself. So it's almost like getting 2 courses for one. I mean, there's just so many hours and hours and hours worth of information. And then we also have the Sharp Report, which basically live in real time. That's only $15 a month. You get to look over my shoulder as in real time, not after the fact, not curve fitting. Oh, if I would have bought that. No, before, during, and after, losses and all, drawdown and all. Watching me, it's basically a look over my shoulder as I perform 3 of those processes. Okay? One other thing I'd like to say here at the end of this podcast is we are not the only ones out there doing this. Okay? Sometimes we talk a lot about the snake oil salesman and how you can get ripped off and giving people the complete picture that, I don't want ones to think that we're the only ones. We're not. We also have our affiliate partner, which is Discovery Trading Group, DTG. So I'm going to fill you in on some guys that I think, and I know, one of which I know is the real deal, but I think are the real deal. Okay? So this isn't just a sharp trade thing. All right? Let me also pump some other people. First of all, yes, there is our affiliate partner, Discovery Trading Group, for risk models and developing your own risk model for intraday trading, especially on futures. DTG is the OG. They are the original gangsters of that. They are the ones. DTG are the ones where they really started getting out there with order flow trading and trying to explain to newer futures traders what was going on with order flow trading, and DTG did sort of a 3-part seminar in conjunction, I believe, with Trevor of Market Delta. Not that they like began order flow trading by any means, and NJ and Rob would both tell you that, but they had this presentation, and since they did that presentation, order flow trading, as Rob says, has become the new darling child, right? And people are sticking red and green red arrow and green arrow crap on order flow trading when that's not what it is at all. It all got popularized basically by people trying to copy what NJ and Rob have shown people what's been going on like forever with trading. And people have taken that and turned it into something it's not. But DTG, the real deal. All right. And risk models, futures trading, intraday, man, that's their stuff. And there's some guys like me there. I'm there. It's a great trading community to be a part of as well, where you talk about the real stuff. Okay. Who else is the real deal? Tasty Trade. Tasty Trade. I am so ecstatic about what Tasty Trade is doing. It's fantastic. I couldn't be more pleased. Well, wait a minute, Dan. Aren't you two competitors? You don't understand. I don't care about that. We need some recompense for our work, right? We're a small little outfit. We're not something the scale, obviously, of Tom Sosnoff over at Tasty Trade. We obviously don't have that sort of bankroll. But I've tried to say several times, we really are interested in helping. We're going to be recompensed for what we've done. But I'm not threatened by Tasty Trade at all. If anything, I say more power to them. How can we get more people there? I mean, there's some differences in thought, I think, between some of the stuff they say, but that's just differences, I think, that any trader is going to run into. That's just, honestly, I mean, you get two traders together, like, why do you run your portfolio like that? Wouldn't it make more sense to do this and that? And the reason that trader is saying that is because the way he likes, personally, his own personal likes and dislikes, likes to run his portfolio. And another, and the other trader's going to say, oh, no, don't run it like that, run it like this. So I have some differences with some things, that Tasty Trade says. I think beginners need to start off with one simple thing with proven positive expectancy and to layer into completely different markets doing wildly different things, not just 3 option strategy. I mean, we trade options at Sharp Trade, but it's like it's like this other segment in our book, right? There's just so many ways to do it. But that's just superficial, silly stuff that two traders are going to approach their portfolio in different ways. I could not want to pump Tasty Trade more. And trust you me, we have no affiliate relationship with them whatsoever. I'm just a guy that really wants to see newer retail traders helped out. And I'm telling you, that's a place that will help you out because they talk about the real deal. All right. So let me think. There's us, DTG, Tasty Trade. There's probably some folks that I'm missing, and I apologize. John Grady, I believe, teaches scalping on futures. And more of book trading, the real deal. Who else? Bulls on Wall Street. Kunal actually came from Michigan originally. Kunal was actually originally in Michigan. Really, he's a really nice guy too. Just the limited interactions I've had with him, just a genuinely nice person. And there's some other guys out there that I'm probably forgetting. And I apologize to you if I've forgotten you. But I'm just saying this to say we're not the only deal, and we are not threatened by talking about them because our whole goal is we want retail traders actually helped with really good information. I think the advantage Sharp Trade LLC has is like if you had like a method like Kunal's, like Bulls on Wall Street, that can get incorporated in. Like we show how to not just run like one short-term trading model, but like, yeah, okay, there's that model. Let me fit that into everything else I'm doing. And then here's how to, you can leverage that up by just a little bit and like scores of process. Like one person said it this way and I don't really like it because it's sort of, I'm very uncomfortable with compliments. I'm not anybody's guru. Look up an entry that we had, Trader Adaptability. I don't know part 2, high-frequency trading nonsense. I'm I don't want to be anybody's guru, but several people have made the comment, oh, this is like how a hedge fund would run its book, like a professional money manager. Yeah, absolutely. That's Sharp Trade LLC. And yes, we give several strategies. So that's sort of the advantage of us. But there's other guys out there, right? And we're not threatened by mentioning them. So, because we don't need to be. Like, we got our stuff. We're happy with it. And I apologize if you're one of the real deal guys that I know and I forgot to mention you. But, it's not just us. Everybody's got sort of their speciality. No one, I think, outfit can do it all. Oh, and Tasty Trades research. Man, retail traders have never had access to stuff like that. I just can't sing their praises enough, really. All right. Anyways, that's the deal. That's the deal. That has been our thoughts. That has been this series. And hopefully it's not lorded the information over you. It's given you a leg up now so that you know. And there's things that you can research for yourself because that's what you should do. And at the end of it has been what it's always been. It's simply been our thoughts, not yours. For whatever the heck day it is, as always, stay safe, trade well, and remember that love doesn't cost a dime.